Cathie Wood, the founder and chief executive officer and chief investment officer of ARK Invest, just revealed that Tesla stock would blow up this week. With the first quarter earnings call coming up, Tesla investors and fans are enthusiastic about reports, and experts like Wood are bullish on Tesla stock, saying it may see an upward climb soon. Why does Cathie Wood believe Tesla stock will blow up in the coming week? What are the statistics and developments to back her claims? Keep watching to find out. When all 6 ARK ETFs returned more than 100% in 2020, while the S&P 500 only gained 16%, Wood earned widespread acclaim as a famous investor. The obliteration of market returns by 6 different funds validated Wood's claim that innovation is the quickest way to grow. The focus of Wood's investment strategy is to find high-impact breakthroughs. According to Wood, artificial intelligence, DNA sequencing, robots, energy storage, and blockchain technology are the high-level areas of concentration, 5 platforms that will be major areas of growth and transformation for the global economy. Tesla certainly fits the bill. Wood's investment horizon is 5 years, which is noteworthy. That time frame, in her opinion, maximizes investment returns for disruptive inventors. These stocks might be worth a lot of money in less than 5 years. Tesla, the electric car maker, has Wood's support. She predicted a price target of $3,000 within 5 years in 2021, after reaching a peak point of around $1,200 in November 2021. Tesla is now trading around the thousands, a swift rebound from its former lower levels. Following the opening of Tesla's Giga Berlin plant for business, the company's stock has climbed to breach the $1 trillion market cap once again. Being a Tesla bull, Wood has previously stated that she believes Tesla's stock will reach $3,000 by 2025. Why does she believe Tesla stock will blow up this week? When you look at recent Tesla activities and news, it's easy to see why. There's been a storm of bullish catalysts. For one, with the inauguration of the Gigafactory in Germany, Tesla will be able to dramatically increase production in Europe while simultaneously cutting costs of importing cars from its Shanghai factory. Tesla will begin shipping vehicles from its Gigafactory in Texas later this month. The company's Fremont factory in California, which has a capacity of 500,000 electric vehicles per year, produces all Tesla automobiles sold in the United States. Gigafactory Texas is expected to be more than triple its output once fully operational, although that will be a few years away. Lastly, Tesla is expected to release profits for its fiscal quarter ending in March 2022 after the market closes on April 20th this month. Investors are eager to see the figures after rumors of higher deliveries and profits spread widely. It's true that the last earnings call did nothing to improve the stock, but there were bigger powers at play then. Experts expected the stock to soar in value after the astonishing fourth quarter report of 2021, but it instead fell much lower. Investors began selling their equities in anticipation of the Federal Reserve's scheduled rate hike, which they worried would drive the stock's value down even further. To be honest, it's been a bumpy year so far for all equities, especially growth stocks, and most estimates were wobbly at best. So, what are the chances that Wood's forecast will come true? We believe that when people see how well Tesla fared despite supply issues, market sentiment will shift toward the positive. According to polls, almost every other brand saw double-digit sales decrease due to supply issues rather than insufficient demand, heightening Tesla's superiority. Some say this was due to Tesla's application of investable innovation, a key trait Wood emphasized in the past. Wood's technique is based on 2 essential elements. The first is that not all opportunities are created through innovation. Investable innovation, according to Wood, reduces costs, crosses industries and geographies, and encourages additional innovation. Sound familiar? The second point is that determining optimal investments involves both broad and detailed investigation. On further research, Tesla's numbers support her claims. In the second quarter of 2021, Tesla set a new sales record of about $12 billion, more than double what it had done a year before. The second quarter's net income was $1.1 billion, which was 10 times more than the same period the previous year, and it's been an upward slope from there. While some experts say the company is expensive because of its high price-to-earnings ratio, others believe it has a good growth in earnings prospects. According to a study by investment bank Jefferies, Tesla has been able to pass on greater raw material costs to customers, boosting vehicle prices while maintaining sales and market share. Tesla's stock price is expected to be affected by the revenue statistics that will be released on April 20th. However, it's important to note that despite a downtime in its Shanghai facility, supply chain challenges, and rising material costs, deliveries increased slightly to 310,000 units in the first quarter of 2020. Due to this, Tesla has already set expectations high, and how investors will react to the numbers remains to be seen. Regardless of short-term catalysts, Cathie Wood is in it for the long run. When asked why she thinks Tesla would go very far in the coming years, Wood cited price cuts in battery pack systems as well as some of the advantages of electric vehicles. These include saving money on gas. Paying 10 cents per kilowatt hour is the equivalent of driving on less than $1 per gallon of gasoline. The fact that because of the efficient electric motor, there is less maintenance, better performance, and so on. As the world gets more concerned about climate change, Tesla can only get more popular. As a result of these premises, she expects the average price of an electric vehicle will fall below that of a gas-powered vehicle in the next year or two. This trend is predicted to continue until 2025, when the average electric vehicle will cost $18,000 versus $25,000 to $26,000 for traditional gasoline vehicles. What do the most recent Tesla stock forecasts for 2022 mean for investors? According to MarketBeat, the average Tesla stock projection from 30 analysts is $935.47 per share, with a wide variation between the low estimate of $250 and the high estimate of $1,580. Analysts have widely divergent options on the stock's fair value based on fundamentals versus the appeal among investors. There were 15 buy ratings, 7 hold ratings, and 8 sell ratings, resulting in a consensus of hold recommendation. Morgan Stanley analysts confirmed their buy recommendation on March 18th with a $1,300 Tesla stock estimate for 2022. On February 14th, Piper Sandler, a U.S. investment firm, boosted its price objective from $1,300 to $1,350 with an overweight rating. These predictions are all subject to change and are highly dependent on Tesla's performance in the months to come. Several analysts think that the sequential growth will accelerate even further later this year, notably in the second half of 2022. Production has already commenced at the company's German facility. Tesla's new Texas factory could start producing cars in a matter of months. However, because the second quarter is off to a shaky start, things may become worse before they get better. For example, Tesla's manufacturing in China has been put on hold due to COVID-19 rules. Furthermore, bringing new factories up to speed takes time. As a result, any impact from Tesla's Berlin production in the second quarter is likely to be minimal. Some believe there will be a direct impact on profitability because Tesla has had a difficult year like the other original equipment manufacturers. Despite all of this, Tesla is still aiming for a 50% increase in vehicle deliveries. Tesla's delivery figures by 2022, according to Gene Munster, managing partner at Loop Ventures, are impressive given the challenges, and we agree. Tesla, he noted, will continue to outperform other automakers in terms of sales growth. Tesla remains the most well-known electric vehicle company. Tesla is currently the world's leading manufacturer of electric vehicles. Volkswagen and General Motors come in second and third, respectively, with a 15% market share. In terms of what is to come, full self-driving technology is still in the works. Musk has underlined his confidence in his 2022 projection, saying he will be shocked if Tesla does not accomplish full self-driving before the end of the year. Based on the promise of full self-driving technology finally being delivered in 2022, on the heels of a positive earnings call report, we believe that Wood might be right. Tesla's stock price might surge in the coming week. Will the stock price maintain those high levels in the coming months? That remains to be seen. Do you agree with Cathie Wood? What revenue numbers do you predict for the upcoming earnings call? Comment down below.